Welcome to Countats. In this lesson, we're going to be looking at the Trade Receivables General Ledger account. This is in fact the second lesson on the Trade Receivables General Ledger account. We've done another one on the General Ledger account for Trade Receivables, or the T account. That one was a more simplified one. So if you are doing the Ledger account for the first time for Trade Receivables, you might want to check out that one before looking at this one. There's also another lesson that we have done on Trade Receivables where we explain in very simple terms what Trade Receivables is, how you do the journal entries for trade receivables, and how it factors into your annual financial statements. You'll find the link to that lesson as well in the description below. But if you have a general idea of how to do T accounts, how to do the trade receivables account, then you can also check out this one here. So let's have a look at the example. Well, first let's read the required. Record the above transactions in the trade receivables general ledger account for the year ended 28 February 2025. And so this is for the financial year that ended 28 February 2025. We'll be doing the T account, or the general ledger account. And we are told here Fresh Organics Limited produces organic smoothies and is a VAT registered company. Very important. If a company is VAT registered, that means that they have to charge VAT on all their goods and services where applicable. All amounts include VAT unless otherwise stated. Here are the transactions for the year ended 28 February 2025. And so since we are asked to do the T account, we are firstly going to draw the T account, and then we're going to go through this line by line and see what really affects our T account and what does not. And so here we've already drawn the T account, trade receivables. We've got the debit and the credit, and we've got the date, the details, and the amount. So we're going to move a bit quicker here because in our initial lesson we went through it very basically for someone who's looking at it for the first time. So if this one is a bit confusing or you are grappling with it, then you might want to check out the lessons that I alluded to, which you'll find in the links in the description below. So let's go through the information. The first thing you always do when you're doing the T account is to see what was my opening balance. Since we are asked to do the trade receivables general ledger account for the year that ended 28 February 2025, we want to know what was the balance as at the 1st of March 2024, which was the beginning of our financial year. That will be what we call the balance brought down. If you know how to do T accounts for any account really, then you would know that's the first thing that you do, the balance brought down. And so what is our balance brought down? What is our balance as at the 1st of March 2024? Well, you have to go through the information. You can see the first one talks about credit sales, the second one cash received, the third one an invoice, the fourth one a trade receivable, which is citrus cord, the fifth one debtors who paid, the sixth one rental B, and additional information, trade receivables opening balance on the 1st of March 2024 was 300,000 Rand. And so that's our opening balance, or that is our balance brought down. Now, what did we say in our initial lesson on trade receivables? We know that trade receivables is an asset, and we know that our assets increase on the debit side and decrease on the credit side. So whatever is going to increase our trade receivables, we put on the debit side. Whatever is going to decrease our trade receivables, we put on the credit side. That's one of the most important notes you need to remember when you're doing any T account. Know what account is it? In this case, it's an asset. Where it increases on the debit side and where it decreases on the credit side. And so if that's the case, what is our balance brought down for trade receivables? That is the 300,000 Rand. And which side do we put it? We put it on the debit side because that's where it increases. Okay, balance brought down goes on the side that it increases. In this case, trade receivables increases on the debit side. By the way, we've also done a lesson on trade payables. If you want to do the T account for that one, you'll find the link in the description below as well. And you'll also know where the differences are between the trade receivables and the trade payables. And so let's go ahead and put this 300,000 on the debit side as a balance brought down, and we'll put our date as the 1st of March 2024. And here's how it's going to look. 1st of March 2024, that is the beginning of our financial year. If you're doing it for a month, for instance, then you'll put yours as the beginning of the month, or the date of the beginning of the month, and then the detail there is balance brought down, and the amount is 300,000 Rand. Easy as that. When you're doing your T accounts, you want to see what is my balance brought down, what is the balance at the beginning of the period. That's what you will put as your balance brought down. So let's go back here and highlight what we've done. Usually you want to highlight or tick whatever you've completed so that it makes it easier for you to see what you have not done as yet. So let's do just that. Okay, what is the second thing that you'll do? Let's go from the top. Remember, we have to look for what our opening balance is before we do anything else, because that's how you do T accounts. So now we can go from the top in order. We're told the total credit sales for the year 1 million Rand. Now if you checked out our first lesson or the lesson that we did on an explanation of of what trade receivables is, then you'd know whenever we make a credit sale, we know that increases our trade receivables. As I mentioned, trade receivables is an asset, increases on the debit side. So we're definitely going to put this 1 million rand on the debit side. Now, we know that it's not just a sale, it's a sale including VAT, because we're told here all amounts include VAT unless otherwise stated. Now what you can do is to remove the VAT from the 1 million rand and put sales separately and VAT separately. But what's commonly done is where we write sales and VAT or sales and VAT, and we put the full 1 million rand instead of separating them when we're doing our T account. Okay, remember, whenever you make a sale and you have to do your journal entries, okay, you will have to separate the VAT from the sales, okay, because your sales is an income account, goes on the credit side. Your VAT here is an VAT output because it's what you owe the revenue authority that you'll have to pay over to them. So you put it on the credit side as well because it's a liability. So you'd have to show them as separate line items. But when you're doing your T account, we can just put it as one amount. So we're going to put it on the debit side. Why is that? Because our credit sales increase our trade receivables, we put it on the debit side. So it's going to be 1 million rand sales and VAT. So here's how it's going to look. We put our financial year end 28th of February 2025, and we put their sales and VAT 1 million rand. Now if you're doing your trade receivables account for a month, as we did in the lesson that I just alluded to, then you can put the date of the sale. Okay, so let's say the date of the sale was the 15th of August, then we'd have to put the 15th of August here. But since we are doing for the full financial year, we're not told specific dates when the sales took place, so we're just going to put our financial year end for the rest of the transactions, as opposed to the balance brought down where you definitely have to put the beginning of the financial year. Okay, now that we've done that, let's highlight number one. Let's look at number two. Total cash received from trade receivables 600,000 rand, or they could have told us total cash received from your debtors 600,000 rand. Exactly the same thing. Now what does it mean when we receive cash from our debtors? It means that it reduces how much we are owed by our debtors. That means we put it on the credit side. Whenever your debtors pay you, or whenever your trade receivables pay you, you put it on the credit side. And what do we call it? What is our detail going to be? That's going to be bank. Remember, when they pay you, they pay into your bank account. So whenever you receive money, you know that the account is bank. So we're going to put it on the credit side, bank, and we put 600,000 rand. And of course, we're going to put our financial year end. Like I said, you're dealing with a month. You can put the date that you were paid by your debtors. But in this case, since we're doing it for the financial year, we just put the end of the financial year. Okay? But you can check out the first lesson where we were dealing with a month specifically. So here's how it's going to look. 28th of February 2025. The detail there is bank, and the amount is 600,000 rand. Now, if you're doing the T account for the first time, or you're confused why we're putting the account in specific places, then you might want to check out Accounting for Beginners. You should be part 3. You'll find it in the link in the description below, where we explain for someone who's looking at T accounts for the first time how T accounts work. Otherwise, if you're understanding this, you already know why we're putting the amounts where we are putting them. So let's highlight that one because we've just done it. Number 3, an invoice of 56,000 rand from a creditor was recorded as a credit sale. Now, what I didn't mention at the beginning, and I should have, and I can mention it now, you want to pause the video here, attempt to do the rest of the questions, draw your own T account, and attempt to answer it and complete the question, and then you can come and press play and mark yourself and see how well you did. As I always say, you'll be in a much better position than someone who's just following along and just watching. So you can go ahead and do that. Alright, I hope you've attempted the rest of the questions. What did you do for number 3? An invoice of 56,000 rand from a creditor was recorded as a credit sale. When we know that's a mistake that was made by whoever was recording, the bookkeeper for the company, for instance. So this is an invoice from a creditor. And we know what is a creditor? A creditor is our trade payable, meaning the supplier, our supplier, meaning we owe them this money, 56,000 rand. But we recorded it as if we are the one who sold. We recorded it as a credit sale. Okay? So we need to correct that error. What had we done by mistake? Well, remember, whenever we make a credit sale, what do? We record sales and VAT on the debit side, as we did for number 1. If you remember, we made a credit sale, we recorded sales and VAT 1 million rand. In this case, for number 3, we mistakenly did exactly that. We recorded sales and VAT on the debit side as 56,000 rand. But as I've mentioned, we didn't make a sale. In fact, we had bought from our supplier on credit. So we need to put on the credit side the 56,000 rand. Remember, we had put it on the debit side because whenever we make a credit sale, we put it on the debit side as an increase to our trade receivables. But in this case, it had nothing to do with trade receivables. So we have to put the amount on the credit side to reverse the entry. And what is the detail going to be there? It's going to be sales and VAT, because that's what we did initially. We thought it was a credit sale. We recorded it on the debit side as sales and VAT. But now we need to reverse that sales and VAT by putting it on the credit side. Okay, that is how you're going to go about correcting this error. If you want to understand more on correction of errors, you'll find the link to that lesson in the description below, where we did suspense account and correction of errors and how to account for it in your books. Otherwise, if you want to check out any lesson pertaining to accounting, whether it's relating to what we're mentioning in this specific lesson or any other lesson, you can visit our channel and peruse through the hundreds of videos that we have there. Okay, so let's correct this one here. We'll put it on the credit side, sales and VAT 56,000 rand. You notice that for number one, as I mentioned, we put sales and VAT 1 million rand on the debit side because we correctly did make the sale and we recorded it as such in our trade receivables. But for this one here, we had recorded it on the debit side because we thought we made a sale, but it's actually a purchase from our creditor. That's why now we are reversing that sales and VAT by putting the 56,000 rand on the credit side. Hope that's clear enough. Hope you attempted it and hope that's the answer that you also got. Okay, so let's highlight that one. Let's look at number 4. A trade receivable, Citrus Core, was declared insolvent. The total owed by Citrus Core was 20,000 rand. Citrus Core agreed to pay 60 cents for every rand owed. Fresh Organics, which is us, as you can see from the top here, received the payment and wrote off the remaining amount. Now, if you've dealt with bad debts before, you should know how to handle this one. It's quite easy. Remember, whenever we have a bad debt, that reduces our trade receivable, specifically when we're declaring the debtor insolvent. Okay, we are saying that we are removing him completely from our books because we don't believe we'll receive the money. But they agreed to pay us 60 cents for every rand owed. In other words, they're paying us 60% of the 20,000 rand. So we need to calculate how much that is, and we will put that as bank. 20,000 rand times 60% will be bank, and the remaining, as we are told here, was written off. Remember, Fresh Organics received the payment and wrote off the remaining amount. So that would be 40% or 40 cents for every rand that we are writing off. So 40% times 20,000 rand, that's how much we are writing off. We're going to put it as bad debts. So basically, we're going to have two credits here. We're going to have one for bank, which is the 60% of 20,000 rand. That's how much we are receiving, or we have received from Citrus Core. And the other is 40% of 20,000 rand, which will be recorded as bad debts. Okay, so at the end of the day, the full 20,000 rand is accounted for or is removed from our trade receivables, and that's why we're putting them on the credit side. Hope that's easy enough and simple enough to work with. So let's go ahead and do that. How much are we actually receiving in rands? Well, I've just mentioned it's 20,000 rand times 60%. How much does that give us? That gives us 12,000 rand. That is how much is coming into our bank account and how much we'll record as bank on the credit side of the T account. And then the remaining 40%, which is of course the 8,000 rand, right? 20,000 rand minus the 12,000 rand is 8,000 rand. Otherwise, you can do the exact same calculation that I alluded to earlier. 20,000 rand times 40%, that's 8,000 rand. That's how much we're not going to be receiving because he's declared insolvent, and that's how much he's unable to pay us. That's why we're recording it as bad debts. So we have two accounts, as I've mentioned, bank and bad debts, and this is how it's going to look. Bank 12,000 rand, bad debts 8,000 rand. That is how you account for it. If in your situation you're told that the full 20,000 rand is not going to be recovered or it's irrecoverable, then you'll record the full 20,000 rand as bad debts. But since we are receiving a portion of it from our bad debtor, then we have to record that portion as bank and the remaining that we're not going to receive any longer as bad debts. That's easy to do, I'm sure. So let's highlight that one as we have just completed it. Let's do number 5. Debtors who paid within the required period received a settlement discount of 120,000 rand. Whenever we issue a discount to our trade receivables or to our debtors, we record it on the credit side of the T account. Why? Because they no longer owe us that amount. We've issued them with a discount, meaning that they don't have to pay us that amount any longer. So we're going to put discount allowed 120,000 rand on the credit side. Remember, discount allowed is an expense account to us as a business. So whenever you issue a discount, you know that's an expense, and that will reduce our receivable because we're issuing it to our debtors. Don't confuse it with the situation where you're issuing discount to your cash customers. That has nothing to do with your debtors. I mentioned at the beginning, cash customers have nothing to do with our trade receivables. But in this case, since we're issuing it to debtors, it's going to affect our trade receivables. So we're going to put discount allowed on the credit side, and we put the 120,000 rand. So here's how it's going to look. Discount allowed, 120,000 rand on the credit side, because they no longer owe us that amount. So let's go back and highlight that one. Number 6, Randall B, who was declared insolvent in the previous year, paid his debt of 35,000 rand. Now we have to put on our thinking caps here, because when was this person declared insolvent? In the previous financial year. That means in the previous financial year, we recorded it as bad debts, which is a debit, and we credited our trade receivables. That means we removed them from our trade receivables last year. So that means, remember, we had this opening balance of 300,000 rand. Randall B was not part of this 300,000 rand because we removed him as a bad debtor last year. Okay, so what does that mean? Well, it means that this amount of 35,000 rand has absolutely nothing to do with our trade receivables. We are not reinstating him into our trade receivables any longer, because we actually received money from him. Whenever you have what is called bad debts recovered or credit losses recovered, that is an income account. You're going to debit bank with the amount that you received from this bad debtor, and in this case it's 35,000 rand. So we debit bank 35,000 rand, and we credit bad debts recovered or credit losses recovered 35,000 rand. And you can see in that journal entry, there's no trade receivables. Why? Because it's not buying again from us this year, and that's why we're putting him as a trade receivable. No, it's someone we had wrote off as a bad debtor, and now he's paying us. And so the only transaction which has happened here is us receiving money from him and recording the income as a bad debt recovered. So it has nothing to do with our trade receivables. I would say number 6 is one that is usually found confusing, but you just have to think of it in those terms. But I hope that clarifies it. If we had declared him insolvent last year, let's say they told us we are declaring him insolvent this year, well, that would mean that we will record bad debts this year, as we had done for number 4 with the 40% that we're no longer going to receive. But if it's someone who was declared insolvent in the previous year or even 3 years ago and is coming back to pay us now, that will not affect our trade receivables account. And so this will have nothing to do with our trade receivables account. Again, if you checked out our lesson on trade receivables explained, that where we went through the basics of trade receivables and how to account for it and how to do journal entries, you would understand this, as we showed how you journalize when you have bad debts recovered. Okay, so this will have nothing to do with our trade receivables, so we're just going to highlight it as red because it will not come in there. And you can see we have done everything that we needed to do here. Okay, there's nothing that we haven't highlighted. Of course, this last bullet point was just telling us what the VAT rate is, if we needed to isolate the VAT, as I explained at the beginning. Otherwise, we've just completed all our entries. All we now need to do is to go to our T account and total up the debit and compare it to our credit. Remember, if you know your T accounts, if you checked out Accounting for Beginners Part 3, you would already know this. We compare the total of the debit and the total of the credit. Whichever side is bigger, we're going to put it on both sides. And I'm sure you can already tell which side is bigger. The debit side is bigger, right? We've got 1 million rand and 300,000 rand. So that's 1.3 million rand. And you can see here on the credit, the biggest amount is 600,000 rand and the 120,000 rand. So it doesn't even get to a million. So since we know that the debit side is bigger, we're going to put the 1.3 million rand on both sides. So let's do that. 1.3 million rand on the debit, 1.3 million rand on the credit side. Now that we have done that, we ask ourselves, how much is missing on the credit side to make it equal the debit side? In other words, if I add everything on the credit side, what is missing, or how much is missing to make it 1.3 million? Well, all I need to do is to take my 1.3 million rand minus the sum of all this, and I will get what the balance is on the credit side. And what will we call that? Balance carried down. And so here it is, balance carried down, 504,000 rand. So in other words, if I add together all these amounts, including 504,000 rand, I will get 1.3 million rand. So what is this balance carried down of 504,000 rand? Well, that is how much my trade receivables is at the end of the financial year, meaning at 28th of February 2025. That is how much my trade receivables is sitting at. And that's the point of doing the T account. You want to work out how much is my trade receivables balance at the end. At the beginning of the financial year, we know it was 300,000 rand, but now at the end of the financial year, it's 504,000 rand. And so to close it off or to balance it off, we now need to come to the debit side, under the total, okay, since the bigger side is the debit side, we'll put balance brought down, which is going to be the starting amount for the next financial year, and we put the 504,000 rand. And the date here is going to be the 1st of March 2025, meaning that's how much we're going to start the next financial year with. And here's how it's going to look. 1st of March 2025, balance brought down 504,000 rand. So meaning if we're going to do our trade receivables account for the next financial year, we're going to start with the balance brought down of 504,000 rand as at the 1st of March 2025. And you should know this if you checked out that lesson that I alluded to earlier, or the first lesson that we did on the trade receivables T account. I hope you've gained value from this lesson. You know how to deal with a complex question on completing a trade receivables T account or the general ledger account for trade receivables or debtors. If you haven't gained value, consider subscribing to our channel, like this video, share it to those you think it might help, and also comment below letting us know what you have learned from this lesson. If you'd like to support our efforts and the work that we do and get access to this document and many other documents that will help you in lessons such as this, you can consider joining our membership as well. Till next time, cheers.